Welcome to the one and only channel on YouTube dedicated to educating the viewers on how to improve financial literacy. Larry Fink, a sweetheart of Wall Street, recently took a loss in the trading market of $100 million. Fink, who has been humiliated, is now compelled to leave the company. Despite this, he will go on to create BlackRock, which will become the most powerful company in the world. But before we proceed to today's video, do not forget to hit the like and subscribe buttons and click on the notification bell so that you will be notified every time we upload a video. Now let's get down to business. California is becoming the most populous state. Like the rest of the country, California's 60s were a time of political upheaval. In the hopes of one day having an effect as a politician, Larry Fink decides to enroll at UCLA in order to earn a degree in political science. After completing his Master of Business Administration degree at UCLA, Fink goes on to work as a bond trader for one of the most prestigious investment banks in the world, First Boston. This is a field in which Larry Fink excels. It doesn't take long for him to become the division's youngest manager after his meteoric rise through the ranks. The American economy recovered from a decathlon slump by 1983. Reagan boosted the economy by slashing taxes and deregulating Wall Street, fostering financial innovation. Mortgage-backed securities is one. Larry Fink was one of the brains behind this financial innovation that 20 years later became an economic bomb. In the meantime, he markets these new securities to huge investors like pension funds and endowments, generating tens of millions in fees for First Boston. First Boston specialized on mergers and acquisitions during the time. Larry Fink becomes First Boston's most profitable employee after earning $1 billion. But after that, he suffers a loss of $100 million in only one quarter of 1986. How would you feel if you lose that large amount of money? Comment your thoughts below. That was 1 year before the historical significant meltdown on Black Monday. And despite the fact that everyone was making money, the market continued to remain in euphoric state. The point is crystal clear. It is high time to get out of this disaster. Because of his stained reputation, no investment bank will be interested in employing him. Larry Fink, who is 36 years old, does not have a job. Fink, who has always been a competitive man, is adamant that he will not give up and is resolved to reclaim his former glory by any means necessary. This time around, he plans to launch his own company, and in order to accomplish it, he will look for investors. However, given his reputation, it will be practically hard for him to raise money until he establishes a relationship with the illustrious Steve Schwarzman. Blackstone founder Steve Schwarzman is a strong Wall Street person. He made Blackstone the world's largest private equity firm in 30 years. By 1988, Blackstone was a lesser-known consulting firm, and Steve Schwarzman had left. Steve Schwarzman just founded Blackstone as a private equity business in 1988 and barely completed his first deal, but he's already thinking big by expanding it and considering a wealth management business. After meeting Fink, Schwarzman came to the conclusion that he should begin a business partnership with Fink under the name Blackstone Financial Management and invest $5 million. Fink has taken away from this experience the wisdom that one must always be risk-conscious. One of his guiding ideas of making investments is that he will not risk any money until the potential for loss can be evaluated and assessed. What would be your guiding principles when you invest your money? Let me know in the comment section. When it came to making decisions on investments, he was one of the pioneers in the field who relied largely on statistics and algorithms. Fink has reclaimed his position at the top. He is aware that in order for his company to expand, They will need to increase the number of stock options they provide in order to keep talented employees. He insists that Schwarzman give up a portion of Blackstone's shareholding in the company. The fact that Steve Schwarzman did not go along with his plan was really disappointing. When there are two alphas in a relationship, conflict is inevitable. After having his proposal shot down by Steve Schwarzman, Fink made up his mind right away to entirely sever ties with the company by locating a buyer to purchase Blackstone's ownership. He made this decision after Steve Schwarzman's rejection of Fink's proposal. PNC Bank is an acronym for Pittsburgh National Corporation, which is the name of an established and venerable financial institution. PNC went on a massive acquisition binge in 1991, acquiring hundreds of other companies in the process. It is the ideal buyer for Fink to use in order to free themselves from Blackstone's grip. They make an offer that is in the hundreds of millions of dollars to purchase Blackstone's stake. He has settled on a price with PNC for selling the asset management firm. This is the worst decision Schwarzman has ever made. Back then, not even he could have imagined that Blackstone's side business would grow to a financial powerhouse that would one day overshadow even Blackstone. The year 1994 proved to be pivotal for BlackRock. The company was still quite modest in size after it had broken away from Blackstone. Fink is playing without any reservations in order to win. It is up to him to uncover an advantage that his competitors do not have, and he will get it from an unexpected source. Fink's group of quantitative analysts put in a lot of hard work over the course of several weeks in order to reevaluate the portfolio and repackage the assets into a new group of derivatives. BlackRock assisted GE in selling off the assets in stages while maintaining as much of their worth as possible during the process. But beginning in the early 1990s, Larry Fink's financial engineering practice emerges as his most significant source of competitive advantage. Since that time, BlackRock has earned the reputation of being a ghostbuster for businesses that are struggling with troublesome assets. GE's success boosts BlackRock's Wall Street credibility. BlackRock's AUM rose to $46 billion 3 years after splitting from Blackstone. Its parent company, PNC, merged with BlackRock. Larry Fink, a billionaire with $154 billion in assets, collects art. He believes arts and real estate are the two largest repositories of wealth in the world, and investors with more than $100,000 should utilize arts as an inflation hedge over gold. Rising prices have benefited art greatly. Fink wants to become BlackRock the largest publicly traded asset management in America. BlackRock will have $400 billion in assets in 5 years. In 10 years, Fink's BlackRock has become a monster that only wants to grow. During Clinton's second term, the US saw a solid economic rebound. What do you think Larry Fink would have done next? And then Fink joined Wall Street. BlackRock dominated Wall Street. Under the prosperity, a crisis is building. Fink's 1980s financial derivatives are now a time bomb. Congress enacted the Commodity Futures Modernization Act in 2000, banning derivatives regulation. Securitization earns banks billions. This company connects trillions of dollars in mortgages and other loans with investors worldwide. Real estate values soared after anyone could acquire a mortgage. Bear Stearns is the first to fail bank. The government wants JP Morgan Chase to rescue Bear Stearns. Jamie Dimon is Wall Street's shrewdest banker. Larry Fink advises him not to buy Bear Stearns at a loss. Tim Geithner, the deal's orchestrator, contacted Larry Fink about Bear Stearns. It's a conflict of interest normally. Everyone disregarded it because Fink was too good, though BlackRock is unhelpful again. Larry Fink rescued the financial sector. The financial crisis helped Fink become Wall Street's new king. After the 2008 housing crisis, issuing and trading fixed income derivatives is less favorable. Since the early 2000s, the internet has been widely available, allowing Facebook and YouTube to thrive. Social media allows instantaneous, frictionless mass communication. Fink knows this will transform the finance industry. BlackRock began buying ETFs after the 2009 housing crisis. BlackRock will eventually own half of US ETFs. BlackRock raised $103 billion in 2014. The firm becomes a big shareholder in nearly every public corporation. Larry Fink has the most influence on the US economy. He's the 21st century JP Morgan. Fink has grown more involved with every company's board. And that concludes our video for today. If you found it helpful, please give a thumbs up. What do you think? Share your ideas with me in the comment section. I'm interested in what you have to say. Having said that, make sure you subscribe to this channel and click the notification bell so you would be notified every time a video is uploaded. I hope you learned something, and I'll see you in the next one.